Also reporting earnings this morning, Union Pacific Corporation, ticker symbol UNP. This came short of expectations on both the top and bottom lines as operating expenses jumped over 14% year over year. This was headlined by fuel prices growing 43%. Keeping a close eye on shares this morning. I believe we had them on the screen a moment ago here. But for UNP here, I think what they also pointed out within this report was revenue growth offset by some of the elevated operating expenses and operational inefficiencies that they did highlight as well. Higher inflationary environment, but saying that they made good progress on employee safety. Remember, just this time last year, there was a lot of questions about employee safety as you had some of the looting that was taking place in the West Coast of the different railroad operators as well. And so that this time last year, now a different picture perhaps as they kind of prioritize just making sure that their staff was safe in the operations as well.
And I'm using a lot of these industrial reports just to get more clues on the economy. So you had 3M, 2,500 layoffs in the manufacturing space, disappointing revenue outlook and earnings. GE, earnings warning for the year for them, little sluggishness in terms of operating revenue for them. And if you look at Union P's earnings release, they're saying they saw a 3% drop in quarterly freight car velocity, and then the average train length decreased 1%. Not exactly a positive sign in the healthy economy.
One good thing to point out here, one of the reasons maybe the stock is up, the adjusted operating ratio, which is something that the railroads are really measured on at 61%. That is above the estimate of 60%. And it's also, that was a level that the railroads have been trying to get back to sort of post-pandemic, right? Mm-hmm. They wanted to get that operating ratio at the 60% threshold. So that is a measure of success, I think you could say, for UNP. And that's something to ask Lance Fritz about.